Hello and a very warm welcome to your weekly technical update, your guide to the charts that matter this week. I'm Nadine Blaney. Well, you could be forgiven if you're frustrated with the S&P ASX200 this year. Buy and hold strategies haven't been working as the market has bounced around, but ultimately done very little. Violeta Torodova from Leverage Shares says, on the charts, there is no sign of a breakout anytime soon.
We look at the chart, we see that over the past year, the index have pretty much have been trading sideways, roughly consolidating between 8,260 and 9,200 points. And over the past 12 months, the index has delivered a mere 4%. And over the past 2 months, that trading range has actually narrowed even further, with the XJO trading between 8,485 and 9,021 points, which means that buy and hold strategies are barely returning anything. And in such a market environment, investors need to be more proactive and nimble and embrace some trading opportunities. In that sense, I think it's very good to start looking at some stocks that have experienced significant declines over the past 12 months, and they're starting to show some signs of a reversal, which of course it will reward investors in the medium to long term. And looking at the RSI, I don't see any signs on the chart that there is improvement or a sign of a breakout anytime soon.
David Bird from Mastering the Markets is also watching the charts for any sign there are some good times ahead.
So what we're looking for there is if we can break above 9,000, we might finally be out of this kangaroo market, finally back into a bull market, which would be an absolute pleasure. So yeah, I believe that there's a good chance that the low is in. I believe the low came in there at 8,400. And as long as we can stay above 8,600, we should have finally some good times ahead of us.
While at an index level, it's been frustrating for some traders and investors. David Bird from Mastering the Market says there are some beaten down stocks on the verge of something very good. Here is his technical take on Car Group.
So it's been hit pretty hard. It was up at the, I think, high 30s and has come down to, up to nearly just over 40 and came down to pretty much 50% up to that 22.50. And you can see there that we've just put in a reversal trend now. We've broken that decline and we've got some great volume coming in there as well. So as long as we can hold above that kind of $25 zone, things are looking good, but it could be some early signs of a reversal there on Car Group.
Violeta Torodova from Leverage Shares also has her eye on Car Group. She says the technicals point to signs the stock is trying to form some sort of a base. Take a look and listen.
And the first encouraging sign I'm noticing on the chart is the bullish divergence between the price and the relative strength index indicator, suggesting that the stock is most probably at a turning point. Looking at the price structure, we are definitely seeing signs that the stock is trying to form some sort of a base, and the key level for investors to watch in the near term is resistance at $28.16. Which in my view in the next few months is going to be broken. That resistance is the previous support level, and it looks like the price will struggle to break it initially. However, subsequent breakout appears to be on the cards. In the very short term, I'm expecting to see a little bit of a pullback, given that the momentum indicators have reached overbought territory. So any pullback to around $24 would present a very good buying opportunity for investors, with a medium-term upside target sitting at around $32.
Well, another stock David Bird from Mastering the Market has his eye on is Credit Corp Group, in particular, the huge volume going through that stock right now.
Can you see how we've had that massive horizontal line go around that $12 mark? That means buyers have stepped in there for a long time. And then recently it actually broke below, and I've said there that's a possible what's called a liquidity bottom. So something I always say is you break major support or resistance for two reasons. One, to continue the trend, or two, to come down and grab all the liquidity, because people like myself, we have our stop losses under those major pivots. So what they do is they come down, grab those stop losses, clear out all the remaining sellers, no more sellers left, and then we go up. So you can just see that we've now broken back through that major level, back through the decline. I haven't got the volume there, but if you look at the volume, there's huge volume, the most volume we've ever had come through on Credit Corp right now. So you've got huge volume on a change of structure back through some major levels there. So CCP could be a good one to keep an eye on there.
And that's it for this week's edition of the Charts to Watch. Join us for more technical talk next week. In the meantime, happy trading.